Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. I have my esteemed, trusted co-host here, Matt Nadeau.
Hey, everybody.
All right. Well, before we start, I just got to say, I wiped out hard this week snowboarding with my daughter on Wednesday. And luckily, my face and my chest and ribs broke the fall. Okay. So if any of you have ever hurt yourself, your rib area, you'll know what I'm talking about. But I'm in some pain. Luckily, it only hurts when I breathe.
Okay? You're playing hurt today. Thank you.
Yeah. So if you see me grimacing or grunting, that's why. No, all kidding aside, it hurts so bad when I cough. And I'm just dreading if I have to sneeze at all. I can't even.
So everybody who's watching us on YouTube, you get to see. That's actually how Ben's face normally looks. That's not after a crash. Nah, I'm kidding. Giving you a hard time. Speaking of
Super Bowl.
Yeah, I was going to say it's like a holiday weekend, right?
Yeah, man. Who are you going for?
Well, you know, I hate the Patriots.
I hate them both.
So I grew up with a lot of hate in my heart. So I hope Seattle wins. I think they're going to win. That I'm going to plant my flag with my bold prediction. I think they're going to win pretty easily.
I hear you. Yeah, I think they're going to win. I don't like either team, but for some reason, my son likes the Patriots. He was playing flag football this year, and their team was the Patriots. So I told him I'll root for them.
You got to do that. You got to do
Hopefully,
that.
it's a good game.
Yeah, for sure.
All right. Well, as always, we are founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm right here in Barrington. And we are fiduciaries. And as an independent, family-owned firm, we truly have the freedom to focus solely on your interests, not some corporation or those shady private equity companies that are buying everything up these days.
And of course, as always, want to say hi to our clients. I might be driving today, getting some snacks and supplies for the Super Bowl. Thank you for listening. We appreciate the trust you place in us. And of course, we love every one of you. And we have a great show planned for today. We got a big topic. And the first time we ever talked about Bitcoin on the radio was back in like 2017 when it was trading at around $2,000. Well, I wish. Well, it's crashing right now. It's not down to 2,000, but my gosh, when we look back at September of last year when it was almost $130,000 a coin, it's dropped dramatically. It's getting close to 60,000. We're going to talk about why that might be an issue for the broader stock market, not just Bitcoin. And then later in the show, we're going to talk about a really good strategy for some people, especially if you make too much money. It's called a Backdoor Roth IRA, so you don't want to miss that.
All right. And most of you are probably listening to us on the radio, our home AM 560. But just so you know, in case you are watching our YouTube channel, please subscribe. You can go on our YouTube channel on moneyhourradio.com. You can see this recording, all of our previous shows. Like and subscribe while you're there. It doesn't cost you anything. It's a huge boost to our channel. Also, please sign up for our weekly economic newsletter. It's called the 5-Minute Market Brief. It's succinct, easy to read, lets you know exactly what we're seeing and thinking. And then lastly, please follow us online on our BN Wealth social media pages on Facebook and Instagram. All right, let's get into our first topic today.
Yeah, Bitcoin. It's like a car crash you can't look away from. It is crashing hard. It's down. I mean, again, everything's moving, but about 45% from its highs a few months ago. Like I mentioned, beginning of October, it was over 125,000 a coin. It's now around 68,000-ish around this recording.
Hey, so why is Bitcoin falling, man?
You know, it's because there's more sellers than buyers, man. You know.
Here you go.
We can just move on. Next subject, right? Nah, I mean, listen, some of you might really be wondering, you know, why should we care? I don't know Bitcoin. I'm not going to invest in this cryptocurrency. But if you're listening to this show, you're probably investing in the stock market, right? You probably are. So this should interest you.
Well, listen closely here, because the Bitcoin crash may be a huge red flag for the stock market, kind of a canary in a coal mine, signaling potentially continued losses coming up for stocks. And Bitcoin has become a very reliable proxy for the risk appetite of the public and also liquidity in the system. And as such, it is also acting as a leading indicator for the direction of the stock market. More to come on that in just a minute.
All right, so let's step back a little bit and just talk about the fundamental reasons why it's crashing so hard. And of course, like with anything, it's impossible to pick a single answer, and especially with Bitcoin because it's so unique and it's still a relatively new asset class. So, for example, here's a few things. One, There's no earnings. There's no corporate financials, guidance, nothing to analyze like we typically have when we're looking at a price of a stock. We can't look at the fiscal state of the underlying government like we could when we're analyzing, sovereign debt markets. And there's no central bank, no economy related to Bitcoin that would help us forecast its outlook if we're comparing it to other currencies like we do with the dollar or the euro or the yen, etc.
However, Bitcoin, in our opinion, most purely is similar to a traditional commodity in that true supply and demand forces are arguably exclusively the driving forces behind its price movements and near-term trends. Bitcoin also has an impossible to decipher amount of intrinsic value, at least compared to other traditional commodities such as oil or corn or gold, which is the oldest form of a safe haven store of value and one that can critically be touched, felt, held, and made into unique valuables such as jewelry.
Right. But what we do know is that demand and interest for Bitcoin is based on its scarcity. There is, by design, a limited supply of Bitcoin. There will never be more than 21 million Bitcoins ever to be mined. So the supply is growing as incentivized mining activity continues, but it's now happening at a much slower pace. Again, due by its own design. It's due to what's called the halving event that happens every 4 years, which really lowers the reward for the miners and coincidentally reduces the amount of new supply for tokens. Again, all of this builds up scarcity.
It's such a unique animal. Now, back to how Bitcoin is a proxy for liquidity in the markets. So, as liquidity goes down and money starts leaving the markets, really broadly, all asset classes tend to go down. But the speculative ones go down first and much harder than non-speculative assets. And as those losses intensify, margin requirements are increased, leveraged positions close out, which adds even more selling pressure. And then under this pressure, investors may be forced to liquidate other assets in order to satisfy the margin calls on their Bitcoin holdings that keep going down. So it starts bleeding into other areas and acts as just this vortex spiraling down prices of everything and just sucks everything down.
Yeah. And again, case in point, again, right now, this is a massive storm in Bitcoin. It hasn't become a massive storm in the market, but we're starting to see things fall, and everything was falling. Stocks, bonds, gold, silver. And again, Bitcoin started all of that, back in October. And that's how Bitcoin is potentially a canary in the coal mine that maybe there could be more losses in the market. And during the last big 4 downturns we had in the stock market, we can go back to like March and April of last year where there was a big one. We had the summer of 2024. And of course, the top of the 2022 market high in January, right before the big bear market happened that year. In each of those times, Bitcoin really ended up being that leading indicator.
No doubt. It actually started peaking a few weeks before the market did. And then once there was a drop, it started recovering a few weeks before the market did. Therefore, if that pattern stays consistent, which we think it probably is going to happen, that means potentially more losses for the stock market as Bitcoin is not showing any signs of bottoming out yet. By the way, the last few major drawdowns for Bitcoin from top to bottom losses was somewhere between 84% and 74%, which each one being a little bit less than the prior. And since Bitcoin is so much more accepted and mainstream now, even just a few years ago compared to that, hopefully this drawdown in it won't come anywhere near that 75 to 80% range. Hopefully the value buyers start buying the dips, but we shall see.
I mean, it was almost 50% at one point this time, so we'll see what happens. So, for you who know us, the people who've listened to us for a long time, we manage our money actively using our advance and protect portfolios for our clients, but we're not making any changes to our exposures just yet. It's still too soon, and this storm could be a nothing burger, right? We don't want to overreact, but we are going to actively monitor our investment positions every day. And if market conditions get worse, deteriorate further, that's when we get defensive. We'll start selling out of the stock market. We'll start shifting into bonds or cash while we wait for things to improve. And we'll literally then get 100% out of the market at times if conditions warrant it.
No doubt. We don't believe in riding potential market crashes all the way down. And if our investment philosophy resonates with you and you want to have your money managed like that, to explore becoming a client, reach out to us online at bnwealth.com or call our office at 847-780-2980. All right, don't go anywhere because when we come back, we're going to talk about Backdoor Roth IRA.
Welcome back. Thank you for tuning in. This is Money Hour Radio. Of course, a show where we try and help you grow your money, pay less taxes, and have a beautiful retirement. I'm one of your hosts, Matt Nadeau. I've got with me my esteemed but injured co-host, Ben Barzideh, with us today.
Hello, everyone.
Sorry about your ribs again, my friend. You're powering through.
Like I said, it only hurts when I breathe. Sorry.
All right. Well, of course, we're founding partners and wealth managers at Barzideh and Nadeau Wealth Management. We're a comprehensive financial planning firm. We're independent. We're local right here in the Barrington area, and we serve the greater Chicagoland area. And we value giving back and trying to make our community a better place. And Ben, that's why, of course, we've launched our charitable arm of our company, BN Giving. It's a way for us to invest in your purpose with you.
Here's how it works. If you become one of our clients and you're a faithful tither or a giver to a qualified 501c3 charity, just let us know. Each year, we will match your donation up to 10% of the management fee that you pay us. And as our firm grows, so does the collective positive impact that we can have. It's such a neat concept. We actually have a really good, fantastic 10-minute video on our YouTube channel on moneyhourradio.com. It's titled The 6 Best Ways to Give to Your Church or Charity. And if you're part of a church or another charitable organization, you should watch that. And if you want to learn more, we would love to connect. Our team offers complimentary educational options on tax-efficient giving strategies that allow donors to maximize their tax deductions while the church or charity receives actually more money than they would have otherwise. And by the way, if you're not a regular giver, that's okay too. We'll still, of course, be honored to work with you. So to explore how you can join our BN Giving community by becoming a client, reach out to us online at bnwealth.com or call our office at 847-780-2980. All right.
All right. Well, let's talk about a little something that sounds a little fishy, a little illegal, but guess what? This is completely legit, totally legal. That's right. Today's episode's topic is the Backdoor Roth IRA.
First of all, worst name ever, man. I feel embarrassed just saying it, right? Especially on a family show like this.
Come on, man. All right. Well, listen, here's why in lieu of its funny name, it is still a powerful technique and really designed to help you save for retirement. We'll explain a little bit in a minute about that. But first, right, we all love Roth IRAs, right? There's lots of love for them.
I love them.
Right? Why not? Your money grows tax-free, comes out tax-free in retirement. Your kids inherit it tax-free. God, I love those two words.
I know, I was just about to say that.
So here's the problem, though. You're making good money. Maybe you make too much. If you're over a certain limit, the IRS says, actually, hold on 1 minute. You make too much money. You can't do that.
No soup for you.
Yeah. So these high earners get blocked from contributing directly to these Roth IRAs.
Which is so wild when you think about it. Basically, the IRS is saying, congrats on your success. And as a reward, you get fewer options,
That's right.
But whatever. So here's a good potential workaround for this. And we are about to explain it to you, our listening audience today. So what is a backdoor Roth IRA and how does it work? Well, a backdoor Roth IRA is a legal strategy that allows high-income earners to contribute to a Roth IRA even if their income exceeds the IRS limits for direct Roth IRA contributions. So for example, this year, 2026, the Roth IRA income phase-out ranges, if you're single, it's between $153,000 to $168,000 of modified adjusted gross income per year. And if you're a joint filer, so you're married, once you make over $242,000 up to about $252,000 of income, it starts getting phased out. And guess what? If you make more than that, you make too much money, you cannot contribute to a Roth IRA.
Yeah, no kidding. So now gets us to this backdoor Roth. The name sounds a little sneaky, but it is fully allowed under the current tax law. And it's commonly used by professionals, business owners, and anyone who has exceeded those Roth eligibility income thresholds. So to understand why the backdoor exists, it just helps to first understand Roth IRAs themselves. So let's walk through what it is. A Roth IRA allows you to take your after-tax dollars. You've already paid taxes on them. You put it into a Roth, you invest that money, and then you withdraw not only your contribution, but also all of the earnings on that tax-free in retirement. Again, as long as you follow all of the rules, and there's just a few of them. And the catch is that the IRS then places income limits on who can contribute directly. If your modified adjusted gross income's higher than those thresholds Ben talked about, you're locked out. So this backdoor strategy gets around this restriction by using a two-step process. And it's going to leverage a fact that anyone can contribute to a traditional IRA, regardless of how much money you make.
As long as you're working or your spouse is working, but yes.
Good point, yes.
So how a backdoor Roth IRA works, we're going to tell you. Here's how it works. It involves two main steps. First, you contribute to a traditional IRA, and it's a non-deductible IRA. So you make a contribution to that using after-tax dollars. And because of your income level or access to a workplace retirement plan, this contribution, like I said, is typically non-deductible, meaning you don't get a tax break up front. So then what you do is you convert that traditional IRA to a Roth IRA. So after the contribution is made, you take that contribution and you convert the traditional IRA to a Roth IRA. And since the contribution was already taxed, there should be little to no additional taxes owed on that conversion, assuming there were earnings before converting. So you never got a tax deduction. So therefore, when you convert it, you don't have to pay taxes. So that's how it works. The money ends up in a Roth IRA where it can grow tax-free going forward, even though you made too much money to put it into it. So many people do this process quickly, sometimes within days, to minimize any investment gains that could create a taxable event from the time you contribute to the non-deductible Roth IRA or IRA, and then you do the conversion.
Yeah, the idea is you want to do it quickly so there's no earnings. But even if you think theoretically like $8,000 as a contribution, let's say it made 10% over the period, which would be awesome. Only $800 in that case would be potentially subject. But so what we want to do now is tell you the benefits, right? There's some benefits. They have some powerful advantages. We talked about one. If doing this Roth, you get that tax-free growth. Once it's inside, all of the investments grow tax-free. Also, qualified withdrawals in retirement are also tax-free. There's never a required minimum distribution on those. So unlike a traditional IRA, you aren't required to start pulling money out of that account at age 73. That gives you a lot more control over your investments, your retirement income, and your tax planning. And it's providing access to you if you're a high income earner. So this backdoor strategy is going to allow people who would otherwise be excluded from Roths and allow them to contribute. And then lastly, one of the real big benefits is you can do this for estate planning benefits. Roth IRAs can be very attractive to leave to your heirs because your heirs also get them tax-free in most situations. So it's a great opportunity for your heirs.
No doubt. So what are some things to watch out for? Well, this strategy is pretty straightforward, but there are a few important pitfalls to understand. The first one, this is the biggest gotcha. It's called the pro-rata rule. And here's how it works. If you already have other traditional IRAs, including a SEP or a simple IRA with pre-tax money in it, the IRS requires you to treat all of your IRAs as one combined account when calculating taxes on a conversion. And this can result in part of your conversion being taxable even if your contribution itself was after tax. So let me give you an example. Let's say you want to put in $8,600 contribution this year into your IRA, which is the maximum you can put in if you're 50 and older. Let's also assume that you have a traditional IRA and it's worth $91,400. So when you make this additional contribution, you now have a total of $100,000 in IRAs. Very simple. Well, when you've performed this backdoor Roth IRA concept, only 8.6% of that $8,600 contribution will not be taxable or tax-free. The other 91.4% of it will be a taxable Roth conversion. So in this example, you would be basically doing a $7,860 Roth conversion, which is basically 91.4% of that $8,600 contribution.
Yeah, it's a huge gotcha because in those cases, you may in your mind think you're not going to be paying taxes, and that conversion is going to cost you some taxes. So you've got to be careful to make this clean. You want to make sure you don't really have any traditional IRA balances. And not to say that you still may not want to do after-tax contributions to your IRA, because that money eventually will come out tax-free, but you just want to be careful. So if you can ahead of time, you could do conversion to your traditional IRA, and then you avoid it in the future, or you could do a direct rollover from your traditional IRA into a 401k plan. The other thing you got to watch out for is timing and earnings. So again, if there's any earnings before you convert it, those would be taxed. And then proper reporting. Backdoor Roths require accurate reporting on IRS Form 8606. If you forget to file, it could get to confusion, taxation, or the IRS notices it down the line.
It's a good strategy, though. And remember, it's not a crime if the Congress accidentally left the back door open, right?
That's right. You can do it. So
and
anyway,
another reminder, the government wants to kill this option. They haven't done it yet, but every few years they're like, well, we're thinking about it just to keep us humble, right? So take advantage of it while you can.
Yeah, so if you're interested, go ahead and reach out to us. We can help you analyze it. If you want to be a client or do a complimentary consultation, we'll help you with this strategy. Reach out to us online at bnwealth.com or call our office at 847-780-2980. All right, we're out of time. God bless you. Hope you have all a great week.
Take care.